morning, you're watching Breakfast Television at 7:49 and time to talk a little business. And for that, we bring in our business editor, Mike Eppel. Hi, Mike.
Hello, Sarah. How you doing?
I'm doing very well, thanks. And it's looking like
Happy Monday.
A steady start to the week, but that's coming off a pretty big drop from last week.
It was exhausting. I needed a weekend to recuperate just after what went on last week. The COVID-19 novel coronavirus, whatever it's called, sell-off that we saw last week of 12% on the Dow and almost 9% for the TSX. Now, some think that the market was sort of primed for a big reset, and that's kind of what we had. But look at what's happened here in the past 2 weeks is economic expectations cut drastically. We saw statistics out of China this weekend that showed the lowest level of manufacturing output on record. Now, their record keeping only goes back a couple of decades, but nevertheless, we've seen a dramatic drop-off in carbon emissions from China as a result of this, and it's rippling through the global economy. Everybody's cutting their forecasts. The OECD out of Paris today said they only see 2.5% growth this year, no growth whatsoever globally in the first quarter of this year. The markets respond accordingly. Everybody adjusts. The price-to-earnings ratios come down because we don't know what the earnings are going to be for a lot of these big companies. So we've got a bunch of them on Wall Street in a correction, if not an outright bear market. A bear market is any time a stock or an index drops 20% from its peak. And there are companies like Boeing and Disney, for example, two of the big ones on Wall Street, and Air Canada here at home, all of them down more than 20% from their recent all-time highs. So this morning, I'll say steady as it goes to the upside a little bit, but it's early.
Right.
We'll see.
Let's talk a little bit about interest rates. Could there
Yes.
be potential of the Bank of Canada cutting them?
Yes. 0.25% is the best bet, maybe even 50 basis points on Wednesday. This is a dramatic turn of events here, Sarah, considering a month ago no one expected that the central bank here would be cutting rates until maybe the later stages of the first half of this year. But everybody's moved up the timeline because they think that central banks globally are going to cut rates just as an economic firewall, so to speak, to the downdraft. Whether that helps at all, because about supply chain. Lower interest rates do not improve a supply chain from point to point, but maybe they can instill a little bit of confidence or at least stabilize things. But if you've got a variable rate mortgage, for example, that'll affect it because that's tied to the central bank's overnight lending rate.
Okay, before I let you go, today is the deadline
Yes.
for RRSP
RRSPs.
contributions.
Yes.
Have you put in your max contribution, Mike?
I wish. But, yes, the best plan is to not wait until the deadline. Put it in monthly, have it come right off your paycheck. But if you did wait until today, everybody gets freaked out. It's like, oh, my goodness, I have to put money in, but I don't want to invest in the market right now because it's crazy. You don't have to. You put the cash into the RRSP, which is just a holding point for your investments, which are then allocated. And what you're doing today is basically just getting the tax break for 2019, lower your marginal tax rate by however much you put in on a percentage basis. So that's, but again, it's about long-term planning.
Right.
Don't get too freaked out about it. And if you're on a lower income this year, you don't have to even claim it for 2019. You can, accumulate that over a couple of years' time.
Right. Yeah, it's a pretty sweet return if you put the money in. I'll say that. I'll see you at the same time tomorrow. Okay, Mike?
Thank you.
All right, let's go ahead and take a look at the markets.
This portion of BT is brought to you by 660 News, Calgary's breaking news, weather, and traffic station.